Welcome to the Trading Justice Podcast. I'm your host, Tim Justice, where we bring clarity to the markets through analysis, insight, and perspective. This week, we're going to kick things off with the market skyline. We're going to look at the major indexes, sectors, commodities, and currencies as earnings season is wrapping up and the Fed has continued to take center stage. Later in the show, we're going to have a fun segment called Stock It or Drop It, where we're going to look at seven of the biggest companies out there post earnings, and we'll rank our conviction on Apple, Amazon, Microsoft, Google, Tesla, and Nvidia, as well as Meta, and discuss what their latest results will tell us about the broader market. Finally, in the Coach's Corner, we'll dig into why Wall Street's ignoring the government shutdown, the truth behind year-end seasonality, and the growing buzz around zero-DTE options. Let's get started with Trading Justice Podcast, and we're going to kick off with a broader look at the markets. I've got Matt and Mark here to join us. Matt, how you doing today, sir?
I am doing absolutely fantastic. I'm excited to be here for another edition of the pod. Hit that like and share. And we got a new master trader, Tim, coming up in mid November. Every single month we do a master trader class, 2-day class for the pro membership of Tackle Trading. And if you're interested in learning how to trade like a market assassin, like those pros out there of tackle trading, come join us on November, I believe it is 14 days from now, November 17th and 18th, 6 p.m. You can hit the link in the description below to learn about all things Master Trader, and it is a amazing class for all new pro members of tackle trading. So if you're looking for a kickstart on your trading, there's no better place than the foundational class at tackle trading called Master Trader. You won't hate it, you'll love it, and you won't look back. Can't wait to see you there.
So
So if you're interested, hit the link in the description below.
definitely an exciting event and always going to be worth their time. So if you're out there and you're a trader, definitely register for Master Trader and come and join us. Mark, how are you doing today, sir?
Listen, my two younger brothers here, burying the lead. Good to have you freaking back
I
on
was
the
I was waiting.
podcast,
I was
Tim.
I was waiting for
Like
him
you
to get
guys
his
all
intro out of the way a
professional
little
and
bit.
crap, and Tim with his smooth operator
He
voice,
sounds
and Matt
good
with
though, doesn't he? Look at that radio.
like smooth operator voice, and Matt. Good to have you back on the podcast, brother. So
Listen,
yeah,
Tim and I have done so many podcasts together that it was just kind of like ripping off the
yeah.
band-aid
I
and
was
getting
about
it
to
on
slap you
again.
both in the face.
Um,
This is a
I
nice.
also want to take a moment just to say welcome back to the podcast, the host with the most, the best host of any podcast in the history of podcasts, Coach Tim Justice, back with the boys. This is awesome. I'm way excited to have you back. Way excited. Give us a couple thoughts as you come back to the podcast for the first time in the last couple of years.
Well, I mean, listen, lesser men would apologize for, not being as good as you just stated or kind of diminish it, but I am the host with the most and I am the greatest at this. So it's good to be back on the throne. There's
Oh,
no
that's
doubt
good.
about
Let's
it.
go. Let's go. Let's
Yeah.
go.
Let's do it. Let's start with the broad markets, Matt. I'm
Yeah.
excited to be here, break these things down, talk to the team about it. Obviously we got a nice little pattern developing on the S&P 500, technically driven here. What are you seeing in the chart?
Yeah, I think two things, and we'll talk about this a little bit in just a moment in the pod. But two things kind of dominate my mind here. Number one is we're still in the heart of earnings season, but as we navigate to the back end of earnings season, you're really starting to see a technical conversation start to brew in the market. And that's not abnormal. That's kind of 2 + 2 = 4 in the market. As you start getting through earnings season, it becomes less about the catalyst of earnings and it becomes more about the technical conversation. Now, this week is a massive week. We got over 130 different S&P 500 companies led by companies like Palantir, ARM, AMD. So not the murderer's row we went through last week with Apple, Amazon, Meta, Microsoft, and Google, but still very, very, very important companies. Now, with that said, I kind of like the technical conversation right now, Tim. Every single week in the Tackle Trading newsletter, I write about the technical condition in the market. And this week, I really anchored on how to navigate this pullback, how to navigate bull flag based patterns, how to see it through a support perspective, and really talking about the important levels that you need to understand through as the pattern develops. Because traders, they wait on patterns, and when they get their pattern, they have a tendency to jump before it comes to a proper conclusion. That proper conclusion is called confirmation. You got to wait till you see that confirm that flag-based pattern, because flags are just kind of the first start in the conversation that at tackle trading, and yes, in this master trader coming up in a couple weeks that I teach called the depth of the retracement. And so I just felt it was extremely important to make sure that our community understood exactly how to navigate the flag-based pattern, exactly where those important areas of support and resistance. And it didn't take long in the market today to kind of see that technical conversation manifest itself. In the futures open yesterday, we had a little bit of a benign open, but we did not have that in the US stock market here this morning. Market got some just ridiculous news this morning coming out of OpenAI and Amazon signing a $38 billion deal. Market was trying to break out of a very key level of resistance at 6,900. But then that cash open came out, market not ready for prime time, came right back down into intraday support. And if you understand the market through the lens of just today, and if you've read that tackle trading newsletter, you know this isn't too surprising. The market is still in inside pattern development. And one of the biggest mistakes traders make is getting too quick on the trigger inside the pattern. You got to wait for that pattern to come to a proper conclusion, and that's got to break the pattern. And so the bull flag based pattern right now is in current development, looks really good sitting at support. If we do violate 6850, it's 6800s in the purview there. On the flip side, where a lot of the conversation has been with the Nasdaq a little bit more of a high base right now. Simple consolidation at the top end of a move is a high base. Typically 3, 4, 5, 6 candles, 9 EMA catches up, and the market wants to giddy up after that. We're coming close to that moment. So a little bit of a benign open this week, but the technicals don't look too shabby as we're going into start this week. I kind of like where the market's setting, but got to come to a proper conclusion with confirmation on these patterns.
Yeah. One thing that you mentioned in that piece that I really liked was the concept of multiple time frame analysis.
Yeah.
If you're short-term trading, you've got to learn how to break it down into the intraday as well as look at the daily and the weekly patterns. Seeing different time frames will help you see those setups develop, get the confirmation points that you need, and then you can accurately, build your trade setups with
Tim, we
that
talk
data.
about these things all the time at Tackle. There's 3 time frames. Every trader anchors to. Day traders have 3 time frames. Swing traders have 3 time frames. Investors have 3 time frames. Sometimes we get so fixated on one that we lose the what's the old saying? The forest through the trees, right? Yeah, you're missing the context of that big picture. Or you're missing the context of exactly what's happening on the intraday. And so in the newsletter every single week, I try my best. It's not always easy in the market, but I do try my best to give them, the readers of the newsletter, a proper understanding of all those time frames that we're navigating. And so I think if you're not anchoring on the newsletter every single week, go hit that link in the description, become a pro member. You'll love the newsletter. It's awesome. Five articles, 3 videos. What's there not to love about that thing?
Yeah, you can't see the forest for the trees. That's an old phrase that we broke down on the podcast years ago. That just made me
We'll
think.
debate that another day there, brother.
That's a callback right there.
It is. I thought you would get it. I did think you'd get it.
Yeah, don't look at this. I mean, don't lose the sight of the bigger picture by just looking at little details or one detail. You got to get 3 time frames. It's always a good way to approach it. Mark, anything you want to
Before you go
add?
to Mark, can I
Yeah.
just give one quick thought on what you just said? I was
Mhm.
talking to a bunch of day traders today, and they were, day traders live on very low time frames, right? And they were looking at 5-minute charts, 15-minute charts, 1-minute charts, 2-minute charts, and there was a little bit of complaining going on. And I'm like, well, have you looked at the daily chart, guys? You're trading within a doji. Like, at least have that context for what is transpiring today. Not every day is the volatility great day trade the same way. Not every day is a great swing trading environment. Today, it's hard to paint a doji simultaneously. And just this is just today, guys, to kickstart the week. But think about this. Doji Monday, S&P a doji, NASDAQ doji, Dow a doji, silver a doji, gold a doji, dollar a doji, crude oil a doji. I think the only thing that did not doji today was Bitcoin. Like, I think that's the only instrument that we did not see, that we saw a little bit of price movement. You can't paint that more than it is. And so that's why context matters. I just wanted to make that point.
100%. It's a great point. I'm glad you came in and made it. Mark, anything you want to add to the technical condition right now in the market?
No, I mean just doji for a theta trader. This has been a freaking fantastic theta environment. May it never end. May it never end. And the one thing I do like about the markets right now are levels are easy. I mean, I'm sure we'll look at silver, gold later on. Levels are easy. The levels are easy where to add risk right now, and so market's pretty straightforward from a technical perspective.
We got to
Yeah.
talk China at some point. Let's go ahead and do that next. Markets have been focused on that discussion between the US and China as they move closer to finalizing a trade framework. The agreement would scale back tariffs in exchange for tighter controls on fentanyl exports, signaling a potential de-escalation, but that would ease one of the biggest macro risks. Matt, how much does China play into your analysis right now and what's going on over there?
I felt they were the second most important part of the conversation last week. If I had to rank last week's important macro events, I would definitely say earnings one. That the Xi Trump summit meeting in South Korea, I would put as two, and I would put the Fed as three on the macro side from last week. I thought it was extremely important to see that meeting last week. There's been a lot of chatter on what China's doing with rare earths, and there's been a lot of chatter what we're going to do on the tariff side of the equation, specifically with semiconductors and specifically with the H20 chip out of NVIDIA, the Blackwell chip out of NVIDIA as well. China wants chips. We want rare earths. I mean, it's a pretty simple deal. And so to answer your question, before the meeting on Thursday, I would say quite a bit. I thought about it quite a bit. It was just kind of a cloud that was hovering over the market. You didn't know if it was going to rain or not, but it's kind of a dark cloud that you're like, okay, I know it's there. I know there's a volatility event. What if it goes bad? So it did play a role last week. But man, they stood tall. They shook each other's hand, and it doesn't look like specifically America wants to entertain pushing this trade war further than what it has been. Now, I'm going to stop short of criticizing the trade deal because I do think this is an ongoing conversation. But I will say that what we saw last week should be loosely described as an alleviation event, not in my estimation what the parameters of an actual trade agreement looks like between the U.S. and China. President Trump had thrown some shots across the bow a little bit, some threats on increasing tariffs, threats on some other things, and it does feel like he wanted to walk that back a little bit. And that's what I generally see as an alleviation event is not necessarily a catalyst that sparks further pricing power and trend analysis, but something that just I think the general market gives a sigh of relief that this dark cloud did not hypothetically dump a lot of water on the market, if that makes sense. So I saw it before the summit last week. It was quite a bit. After the summit, it's very little. And I would say it's very positive to see the alleviation, but I'm going to stop short of saying we have a trade deal with China because as of right now, we do not have a trade deal with China.
Mhm. And if anything has taught us, that until it's done deal, it's not a done deal. We've seen that back and forth
Well,
for 10
I,
years.
we've seen it a lot this year, honestly. I mean, of all the trade deals we've done in the world this year, from the start of the trade war till today, we don't really have ink signed on one trade deal yet. These are promises to do certain things in the future, and they've been good. I don't want to be critical of it. They're better than not, but at the end of the day, trade deals have to have enforcement arms. If they don't have enforcement and parameters to the deal, it's hard to see China when something bad goes wrong abiding by the terms of whatever handshake agreement they got. And so again, I'm going to stop short of praise or criticism on the trade parameters because I don't see this as a trade deal. But I will say it's positive. It's a step in the right direction when it comes to the alleviation of the pressure that was building between two massive economic giants. And so I do think it's a positive, but we're not there yet, if that makes sense.
100% makes sense. Another critical component of the markets has been earnings, and earnings season is
Well,
kind of
before we go
winding
into
down
earnings, I do want to get Mark's take on
on
China
China.
because he gives it equal as much thought as I do. What was your thoughts on the China-U.S. trade talks? Kind of how do you see it, Chucky?
Yeah, I've been pretty bullish for a while now. I mean, Tim, like you might be surprised at that, right? Because
He's
I've
been
been
more
known to,
bullish than me.
yeah, I've been pretty bullish for a while now. And there's only two real things that really concern me as far as disrupting this market for the coming year. One is China, two is the bond market, right? And so as long as China, and I felt that there was the necessary Xi Trump saying the right things for both their markets to be like, listen, we don't want anything nasty here, right? And so,
Didn't
even
seem like they wanted to escalate anything on either side of the aisle.
and I think that's all the really market cares about. I mean, you
Yeah.
look at that big red candle, and I don't think I'm alone in the hey, this is bullish, but there's a couple things. I mean, that big red candle was a Trump tweet on China. China is a
Uh-huh.
very important issue for the stability of this market. So now I think there's things in the bond market in the coming months that we might have to address. May not, I don't know, but you take China out of the equation, that removes one of the concerns that I
I will
had.
say it again, though, Chucky, yet another manufactured crisis that didn't come to fruition where the market finishes higher than when it started.
It's Trump's playbook. When we get done
It's
with
the
the Trump
playbook.
presidency, that will be the Trump playbook. So,
That's the bull market right there.
Yeah. Yeah. And definitely, been a pretty good year for bulls. There's no doubt about it. Mark, it is a little bit surprising to hear you so bullish, but I guess those are the market conditions. You can't really get your emotions involved in
yeah, no, I
trading. You
think
got to
there's
trade
a
what's there.
I think there's a good, and I don't put any weight on valuation as a primary factor, or else I'd probably not be
I was gonna
bullish.
say you kind of have to plug your nose on valuation these days, Chuck.
I
That
just never,
forward PE ratio's rocking 21 in the S&P right
yeah.
now.
So so I
You're
gotta,
paying for earnings.
and so,
Mm.
but I just think the narratives, Juan crew, a phrase I use to describe, administration powers, Trump wants the market higher, Besant wants the market higher,
hmm
powers that be generally get what they want.
Matt, you did mention earnings. Let's get into that now.
Yep.
And delivered some steady numbers, a few negative surprises than expected. But the big question is, how good has it really been? Have the numbers been as solid as it's been reported?
I guess it depends on the space. You know what I mean? I mean, CNBC wrote an article today, and during earnings season, I write a massive update every week in the newsletter on earnings season, and I look at the big drivers, earnings growth, revenue growth. I rank all the sectors, and so if you ever want to get into the nitty gritty detail of all things earnings from a macro perspective, I'm not sure anybody besides FactSet does it better than what we do in the Tackle Trading newsletter. And the only reason I say that about FactSet is because they are clearly the best when it comes to earnings analysis. Just wanted to pay FactSet a little bit of a shout out there because I couldn't do my earnings update every single week if it wasn't for FactSet. They do such a fantastic job. I graded. We're 3 weeks into earnings season, and I gave it a B plus. And I really anchored on, is this an A minus type earnings season? Because earnings season has been largely exactly what we needed it to be. And what I mean by that, Tim, is 3 weeks ago in the podcast, I did a earnings preview and I talked about the blended growth number and I talked about what blended growth had to do for us to have a successful earnings season. And blended growth is went from the beginning of earnings or the beginning of the quarter at 7.9% to the beginning of earnings season at 7.7%. That's not abnormal, but what has been special over the last 3 weeks is it's went from 7.7 to 8.5 to 9.2. And then following Mag 7 week, we had a 1.5 bump up on Mag 7 week, which is exactly what you needed to see. And so the macro story in earnings is extremely compelling. It is extremely compelling. And then when you look at the revenue side of the equation, revenue has been sneakily good here. 6.3 to start the quarter, but every single week just slide up, slide up, slide up to like one of the best revenue handles we've seen in recent history at 7.3% on blended growth. That's not it. We have 83% of companies beating the EPS expectation, which is dwarfing, lapping right now the 5 and the 10-year average at 78 and 75%. There was a couple things when you look at those numbers, and revenue are equally as impressive here. That's an A level environment when you're looking at the macro side of the equation with earnings. But a couple things to offset that kind of stand out a little bit. Number one, the EPS beat rate is really, really good at 83%, but the average EPS beat is only 5.3% right now. That's lower than the 5-year average at 8.4%. And so we're beating, but we're not beating by a massive margin. We're not even beating by the levels that we historically do. That's number one. And then number two, Tim, every single week I do the earnings sector power grid, which basically ranks every sector from a macro earnings perspective. And I rank it from 5 criterias. And when you're looking at the market right now, you're a little bit top heavy in earnings right now, which is not abnormal in the AI world. Like from the second quarter of 22 until today, we have lived in a top heavy market. But even CNBC just today wrote an article about earnings that piqued my interest, and it said it's the K trade where you have these ridiculously strong earnings, K trade meaning going up, and then you have these weak earnings going down. And they also use that to describe the economy a little bit, which, interesting enough, I want to get Mark's take on this. Scott Besson on the on ABC yesterday during one of the Sunday talk shows basically stated that about the economy. There's some areas of the economy that are doing really, 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 really well, and there's other areas of the economy that are in recession. That's a K trade economy. When you see separations of sectors from a fundamental perspective, that's a K trade earnings environment. And so CNBC made that argument that there's a K trade earnings environment here. And it did spark my interest because that's the second reason why I graded it a B plus and not in the A category. Is yes, infotech, comms, and finance has been strong, but even take finance for example. Out of finance, the big money center banks are amazing, beating at like 98% right now, and then the insurance companies can't smell a beat out there, can't sniff a beat out there, and so there are some haves and have-nots. But from a totality perspective, you got to say this earnings season has done its job. It's certainly, in my estimation, has justified the slightly elevated valuation component that we talked about going into earnings season. And as long as these numbers hold up, 83% beat rate, 5.3% EPS surprise, tech with the 90% beat rate right now. You're 60% of the way through earnings. These numbers should hold up. We got a big earnings week this week too, but I'd have to give it a B plus, and I would definitely say if we don't get Santa Claus coming to town this quarter, it's not because of earnings.
Yeah. Yeah. Mark, anything you want to add to that? I mean, obviously,
Yeah, I
we
mean, I
can chat
think
about.
Matt covered the big things, but just let me throw out a couple stats. Like Goldman came out today on the general economy and said that fourth quarter GDP 1%, largely shutdown related. Next quarter projections 3%. But then there's been other big banks come out and say, just what Matt, stats around what he said. Small businesses are not doing great, as a collective whole. They're not.
Tariffs are ripping small
Like
business.
if the
Ripping.
stock market was small businesses, the S&P 500 would be at
We'd have
5,000.
a bear year so far.
You'd be in a bear market right now if the stock market was not. Now
I
it's
agree.
not. It's top
You
heavy.
remove the AI trade from the equation, I think we're down on the year.
And so from an investing trading perspective, it is a tale of two markets, right? There is a lot of risk. Depending on how you're positioned, you're either having a really good month or a really bad month, right? And so it is one of those you have to understand, and this is why we spend so much time on macro, is because if you understand the backdrop, right, you make smarter decisions, right? I mean, the greatest risk I have right now from trading is concentration risk, right? There's a lot of tech trades, but they're kind of all trading on the same gasoline right now, right? So if something disrupted that,
it's called NVIDIA's tailwind.
Yeah, and so, it's one of those environments. It's not a perfect environment by any stretch.
Hmm.
Your average stocks traded like crap since the Fed. We'll talk about the Fed and that more here in a second.
They didn't like the fact they weren't getting their rate cut, Mark.
Markets traded has not traded. Major markets haven't held a bid, and RSP, your average stock, and
Ever
Matt,
since
I mean,
then.
more stocks hit 52 weeks lows the last two trading sessions than hit
Mhm.
52-week highs, and yet the market
Listen,
looks healthy. That tells you what you need to know.
when you go from a clean path of policy to one that is dirty, meaning we are debating what is going to transpire in February,
Markets don't
for
like it, never
some
will.
reason, the market cannot walk and chew gum at the same time. I
Nope.
don't understand why, but the market cannot walk and chew gum at the same time. They cannot look at earnings and be like, oh my goodness, earnings is really, really, really good. Coach Matt from Tackle gave it a B plus A minus. Earnings is really, really good. Not when they're having, like, from 2010 until today, market participants have been just the most spoiled little babies in the history of mankind. If they don't get their rate cut, they cry and cry and cry and cry forever. And so this one's simple to me. Anybody that traded from 2010 to 2020, I think this one's simple. They were expecting to get a rate cut, they didn't get it, and they're throwing a temper tantrum. And that's what we're seeing with their lack of ability to be able to carry bid because they're simply throwing a temper tantrum. I want to remind all those babies on Wall Street throwing a temper tantrum because they not getting their rate cut when they want it, right when they want it. Guess what? J Powell's most likely still doing a rate cut in December. I would say there's an extremely high probability that J Powell still agrees to cut in December. Would you disagree with that, Mark?
No, Goldman puts it at like a 60% chance it's their base case. So
I have it higher.
yeah, I know you do. You
I have it
do.
higher.
Like I'd be
If that was
surprised.
them poly market, I would take the over in a
Yeah, I
heartbeat.
don't, I don't have a like a Polymark specific odds. I will be surprised if they don't cut. But one thing I know in the short term, markets haven't traded well since Powell started speaking. They haven't traded well. So
Well, and it's not like they've traded terribly. We're just talking about a flag on the S&P, and we're talking
well,
about,
unless
hold on, and I
you know
know
what
what you
chart I
want
want
to
you to look
do.
at.
I listen. I see what he wants to do more than anything right now, Tim. He's like, but what about RSP? RSP is horrible. And yes, RSP is downright terrible. Like that's the tell of two markets right now. It's true. S&P in a flag, RSP in an M formation. And the thing about it is, they're the same assets. The S&P 500. S&P 500 in an equal weighted index known as RSP is currently in an M formation. S&P 500 as weighted by the Mag 7 is in a bull flag position. That tells you everything you need to know about the general marketplace. It's not a fantastic picture for your average stock. But again, I saw CNBC blame earnings on that today. That's not earnings related. That's central bank related. That's them
No,
not getting
that's
their rate
lazy
cut.
and it's terrible analysis. That's terrible analysis. This chart was trading just fine until Powell started speaking. Like it's that simple.
Yeah, it was in a multiple time frame breakout situation. So, uh,
Yep.
yeah, I don't think it's abnormal, but do you think the government shutdown is now weighing on your average stock? Because I
Yeah, I
don't
do.
think that technology cares about the government shutdown.
I do. And I know we have a question coming up in Coach's Corner on that, but
Well,
I
I'll
do.
save it. I'll save it. We don't
Yeah,
need,
let's save that one. Let's
yeah,
save that one.
because
I know
that's
it's
a,
weighing on the average person. We'll talk about it, but I
yeah.
hear it from a lot of people talking about the government shutdown, military workers, government workers, but even people. I have a friend, he's in the military and he couldn't get his medical treatment, that from his on-base doctor, So I mean it's starting to upset regular people. Maybe it's upsetting regular companies too. I don't know. We'll talk about it in here in just a few minutes.
Yeah.
All right. Well, I mean, anything else from the Fed? I mean, I think that the cut in December would probably be the over. Definitely, I would be with you, Matt. Is there anything from Powell's comments that are making you feel that way, or is he just kind of
Um,
going along with what he always does?
no, he purposely threw some cold water on the rate cut discussion. He didn't need to do that. Like there wasn't an outlandish question. There wasn't really a conversation going into it. He took an opportunity to he wanted to put out that message for one reason or the other. Um, I don't know why he wanted to put that message out there. There was no debate on the path of policy. And you know me, guys, I anchor against that stuff. I didn't see anybody debating the path of policy, and up until Powell did it. So it certainly gave me some unease, Tim, but I kind of felt like there might have been some political shenanigans being played here on this one. I personally
Mhm.
still think Powell's going to cut. I still think there's a thirst for the cut at the Fed. And again, I think there's a debate here. Inflation is stubbornly high, and it is not contracting. CPI rates are 3%. Those are concerning numbers. There's no doubt about that. Tariffs are putting an impact on many aspects of the inflationary side of the equation. Powell still doesn't know if that's transitory or not. That makes me laugh every time he hesitates on using the word transitory because he doesn't dare use the word transitory. So he keeps saying tariff inflation is a one off inflation. He doesn't want to say transitory for some reason. But no, it was just the general. I don't know why Powell brought it to the equation. I didn't think anybody was desiring to even have the conversation. Because at the end of the day, I'm concerned about inflation, and if inflation was the only concern, yeah, I think you don't cut, and I think you set pat, and you kind of give it another little bit of time to see how that tariff inflation works out. But I have lots of concern on labor. And personally, I have more concern than the general member of America has right now. I don't think America is accepting what is happening in the labor market right now. And I think within the next 6 months, they're going to be forced to accept the realities of an ever changing labor market. And I think the Fed is starting to understand that ever changing labor market. I think the government is starting to understand that the labor market is a concern and that the labor market is going to continually be a concern over the next 5 to 7 years during the AI build out. In that time frame, they're not going to be talking about transitory or one-off inflation. AI ultimately is deflationary, and so I'd focus more on the labor side right now than the inflationary side. But it's not an easy like it's not 2 plus 2 equals 4 here. There's concern on labor, there's concern on wages, and when you got concern everywhere, you get to pick what your message is. And Powell decided to talk about inflation, and that's why the market is now refusing to carry a bid because now they don't know if they're going to get that cut. I kind of feel like the market's overestimating Powell and his courage and conviction to not cut here. I think he cuts.
Yeah. With all of this conversation about the Fed has got me thinking about the dollar and gold. Anything in those charts that are grabbing your attention, Matt?
Two things. One on the dollar, something to keep an eye on. And I told the team at Tackle every single day this week, we're talking about two things, which we talk about quite a bit in general. The dollar has not been a tailwind for the market, hasn't been a headwind. It's been pretty much a nothing burger in recent history. It's starting to become more important part of the conversation, especially if we break out of 100. Keep an eye on that level. It's a little bit extended going into that. I'll tell you right now, I think the number one asset most of us are looking at right now at Tackle is gold and gold relatable asset classes right now. Tracking this pullback like a hawk. Keep an eye on the 9 EMA. That's our anchor. And not going to go through the detailed assessment of all things technical analysis. I'll save that for the pros of tackle trading. But we're watching this one like a hawk. There's no doubt about that. Chuck, you write the global markets. Give us a rundown on commodities here.
Yeah, like dollar, like listen, like dollar and yields. Yields have been going up, dollar's been going up, RSP's been going down. What's the common denominator? All of those moves started happening when Powell started speaking. It like every single one of them. And so there's obviously some, and this is important in case, Powell says something different along the lines or this or that, but those moves have been Fed inspired. And yet gold in the midst of all of this and silver in the midst of all of this is just like, yeah, let's set up for our next move. Let's set up for our next move. And so I think, gold showing relative strength against things has not been a new story for the last 2 years. Shouldn't surprise any of us today, right? We got levels to work with. There's still some things that need to work out. It's one of the things I like about this market. We know our levels. Silver breaks out, I know to get involved. Gold breaks out, get involved. What we all want is that to happen, not tomorrow. Give us a few more days, set up, right? But you know your levels, right? And I think it's very encouraging price action given the volatility that preceded it.
Yeah. And that's the thing about the technicals here, I think, is like tracking pullbacks can be difficult, but at this saga in both gold and silver, the levels are very well established, and it's just a matter of patience plays until we get confirmation. In the Traders Lounge today, we spent a good 30 minutes on both silver and gold talking about exactly what we needed to see for confirmation. The only thing I'll say is come join us in those day in, day out conversations because we're watching these ones like a hawk. All the patterns are there. It's just a matter of coming to a proper conclusion with confirmation. And for anybody that wants to front run, remember what my good friend Jesse Livermore said about confirmation. Confirmation is the insurance that you write on your projection. If silver's going up, what does it have to break out of to be right on your projection? It's got to get above 49. If gold is going to go up, what does it have to do to get right on your projection? It's got to break that 9 EMA and close above the 9 EMA on the daily chart. Without those two things, there's nothing here. With those two things, we got something special. I think they've been cooking for a while. They're ready. They're ready. They're ready to do something. Let's see what we can get.
It's always a good podcast when we get a Jesse Livermore reference, reminiscences of a stock operator, maybe my
One of
favorite
the best
book
ever.
in the market of all time. All right, guys, thanks for the broad market analysis. Let's move into our next segment, and we're going to be doing stock it or drop it. And today, what we're going to be breaking down are the Mag 7 in their post earnings edition. We're going to rank the order of these stock its in conviction. In this segment, Mark and Matt are going to break down the individual companies. They're going to say whether they're going to stock it if they like it or drop it if they don't, using technicals, fundamentals, market context, anything that can go into the analysis. And let's start right with Apple Computer, Matt. Let's bring up AAPL and take a look at the chart. I was writing my grocery list the other day, and I spelled apples wrong. So I spelled it with the ticker symbol.
I do it all the
Always,
time.
it just is what it is. Let's talk Apple.
Yeah, they had earnings last week. Apple came out with pretty decent earnings, kind of a little walk in the park type earnings. They had a 7% beat on EPS. They had an 8% beat on the revenue side of the equation. They raised guidance based on the iPhone and the AI cycle by 3%. Wouldn't give the hat trick treatment because the veracity of the beats were not good enough on revenue and EPS, but a good report nonetheless. And then Apple really just sitting on the 9 EMA. Like we talked about this one in the lounge today. There's people already front running this one in tackle trading. I kind of feel like development is still needed, but it's definitely a stock. It's on the watch list. And Tim, that's a little bit abnormal. I've been highly critical of Apple recently, but after the earnings, kind of like how it's settling in here from a technical perspective, I'm going to stock it for swing trader analysis.
Tim Cook said that the iPhone 17 sales are just off the chart. I know that my girls all was on the pre-order list. They got them shipped immediately. 3 new iPhones coming to my family a second that they were
Looks like it's
available.
going
I
to be
think
better
a
than
lot of
last year,
people,
but I would stop short of calling it a super cycle. But it does look like iPhone 17 sales are not going to be Apple's problem here.
call it a super cycle, call it whatever you want. They're
They
selling
love to
them.
call it, yeah. Super
We need
cycle. When's the last time you did
soup.
it? 3 years ago. We do it every 3 years ago.
Yeah.
Super cycle. Like, okay. Okay.
All right. All right. Mark, stock it or drop it, Apple.
I drop it. I have zero interest. I just and it's like if this was the only stock in the universe, I'd have interest. I just don't like it relative to other things. I don't like it relative to other Mag 7
I would be
components.
so offended if I was Apple right now.
You
If
know,
you were
like,
the only stock in the world, I would maybe give you some hypothetical thought.
and so like listen, Goldman, I've cited Goldman far more times than my soul should
You
allow in one
cited Goldman
podcast.
4 times in the podcast. You're only allowed 3.
I know, but they had a very compelling piece on how can the consumer is basically, imploding, and that we've known that on the lower income level for a while, and how that's spreading up into the middle income cohorts. I just would rather have an AI stock, which Apple is not, versus a consumer driven awesome stock, which Apple is, right? And so I'll drop it.
Gotcha. Well, a little bit of a split decision there. I would be the tiebreaker. I think, yeah, you got to stock it. There's no question about it. You guys talked about the heavy leadership in the market, and Apple's going to get pulled up with that, just even with the investment in the ETFs that are based in it.
Yeah.
Yeah, I'm a stock it. I'm breaking the tie on that one. Amazon next. Let's go to this one. OpenAI, Amazon Web Services announced a multi-year strategic partnership where OpenAI will use the AWS infrastructure. And Matt, you've talked a lot about the AI-driven part of the market. Amazon is breaking out after their earnings, just running. Stock it or drop it. Matt, let's start with you.
Stock it, stock it, stock it, stock it. Put it on the radar for any pullback analysis here. Secondary patterns absolutely play. Amazon has been the laggard of the Mag 7 this year, up until last week's earnings report, where they basically said, and the reason they've been a laggard is for one reason or another, despite their investment substantially in Claude and their investment in AI into the infrastructure of AWS, they've kind of been seen as the one hyperscaler that doesn't move the needle from an AI perspective. Like if Google and Meta and Nvidia and AMD, if they announce things like markets pay attention, markets move, Amazon has really kind of been stuck in mud all year long, all year long. Whereas the rest of the market is at all-time highs. And then some. Amazon before last week was kind of a nothing burger. Um, that's no longer the case here. I think you got to stock it, and I think you got to be looking at it on a multiple time frame because it wasn't just their earnings. I mean, earnings was great, 23% beat on EPS. Revenue was up 13% year over year. It was their what they said in their CapEx guidance, which drives the hyperscalers. CapEx spend was a record number this quarter, guys. An absolute record number coming out of the Mag 7 and the hyperscalers in CapEx spend. And of all of those, Microsoft had a good CapEx number. Google increased their CapEx number. Meta maintained their CapEx number. Amazon increased their CapEx number by 16% to a total of 125 billion for total infrastructure spend in 2025. They said last week we're coming to win this battle to AGI. We're in a massive AI arms race. Amazon is showing their intentions the same way Meta showed their intentions a year ago. And I know we haven't talked about Meta right now. Meta's going to be a drop it for me, to be perfectly blunt with you. But if you'll remember when they decided to increase CapEx spend the last few years, it was nothing but up, 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 and up, and they came out of nowhere. Can Amazon, do a little bit of that number? Obviously, Amazon's been doing great. I'm talking about moving into the future here. I thought their earnings was fantastic. You got to love the announcement out of OpenAI with the $38 billion infrastructure deal there. Although the market is getting a little bit smart to OpenAI announcements, they're not pricing them in nearly as aggressive in their because let's face it, OpenAI's got some fake headlines out there on the revenue side of the equation. But I thought the earnings, I thought the technicals here, and I do think the OpenAI deal is all extremely, extremely positive for Amazon moving into the future. Not a high valuation here like you have had to deal with historically on Amazon. I like secondary patterns here. Long-winded. I had a lot to say, but I'll definitely stock it.
Marquis, stock it or drop it. Amazon.
Stock at high conviction, play any secondary pattern that looks good. You'll make a couple bucks most likely.
Yeah,
So,
that weekly chart. I mean, good reminder. A call
I
back
mean,
to
gap
the
ups are always tricky, right? And especially of that magnitude, but you'll get
You
patterns.
got the rare double gap here.
Yeah, yeah,
yeah.
but you'll get the patterns, play them from a theta perspective. It feels easy. So,
I think it's really simple. I think you wait on the first pullback and then you hit it.
yeah,
Yeah, or even a
high conviction stock
consolidation.
up.
Mhm.
Yeah. Very good. All right, let's keep moving through these seven stocks. Microsoft is up next. Stock it or drop it. Let's start with Mark this time.
The stock it like Microsoft set up well for the future, right? They're going to trade how they're going to trade at times, but their positioning and the type of company they are, I don't think this one's difficult. Stock it.
Yeah,
Yeah,
you're not going to get
definitely
any
different
argument.
pattern.
Say again, Chucky.
Yeah.
I mean, say
I
again.
was just saying, just a definitely different pattern than the other two, though, Matt. So you got
Yeah,
a little
it's
different technical setup.
yeah, you would definitely need to see some consolidation to wipe the stink off of the earnings move here. But in general, you're sitting on a trend line against the backdrop of the 50 period moving average. I do think, a consolidation play here plays. I think credit spreads already play, but it's got to stock it for me. I mean, Microsoft 7% beat, 13% year over year revenue increases, and they've had 45% increase in capex spend this year that looks to expand that next year. Like these companies are not slowing down. At least the ones that are not slowing down, we should keep our eye on the price. When they do slow down capex spend, the market is unforgiving, ladies and gentlemen, and you'll see that when we talk about Meta.
Hmm. Well, let's get into Meta next then. I mean, we're going to go through Tesla, Nvidia, and Meta, but you mentioned and Google, but let's go right to Meta and big gap down, earnings reaction. Matt, stock it or drop it on Meta.
This is definitely a drop it for me on Meta, and it's tough, but technically this is an M formation on the weekly chart. That's a violation of support. That's confirmed. Like these are nasty, nasty technical patterns. That's number one. Number two, you can rave about Amazon and their capex spend. You can do the same thing on the Google side, and you can understand what Microsoft is doing there. Apple's not a big part of that conversation. Meta maintained their capex spend, meaning they maintained their guidance. But Meta also took a $16 billion charge on the big, beautiful bill that got priced into the earnings, and they lost $6 of earnings on that pricing out of the big, beautiful bill. That is a one-time pricing power that had to get priced in, and that dealt with the gap. I was open to the conversation on that gap, but I have not liked any pricing following the gap. Still feels like it wants to sell, still feel like it wants to come test a low point. Where is that low point? We're going to have to wait and see a little bit. I know there are some deep value hunters here that are waiting on some bloodbath in the Mag 7 to start allocating. I don't think that's after off a rip your band-aid off earnings report from last week. I think you look for lower prices here. I will drop it.
Mark, stock it or drop it on Meta.
Yeah, one day I'll stock it. I got too many things working. And I like bottom fishing, but I do not want to play weakness in this market. I want to play
We have to
strength.
define bottom fishing because one day, 2 days after a gap down on earnings getting crushed is not bottom
Yeah,
fishing.
so
I know
like,
you weren't
listen,
making that argument.
yeah,
I was just,
but yeah, no, it's I'm gonna trust the market on this one. Drop it.
Yeah. There you go. All right, let's move on to the next one. Why don't we talk Tesla next and bring that one up?
I'll go first. This is a stock it, stock it, stock it. It has nothing to do with earnings, has nothing to do with their legacy car manufacturer. If you're stocking Tesla, you're stocking Tesla that Elon's going to dominate on robotics and automation through what he's doing with Tesla, and he's going to dominate on the XAI front. 2 years ago, me and Mark were making an argument. Is this a car company? Is this a tech company? I was very, very aggressive on the tech side of the equation. I just kind of feel like we're in the middle of watching that play out. And so if this was just the car company, I would have a different opinion. I don't think it is. We're talking about a lot of other things here. I'm gonna stock it because I don't think Elon loses the AI race. He might not be the first to AGI, but he's not losing that race.
Hmm. Marky, stock it or drop it on
Oh yeah,
Tesla.
stock it. Like and the price action also. I mean, don't bet against Elon. And the price action the last couple of days has been outstanding. And this flew under the radar. It was a massive week last week, but SpaceX got a big, huge government contract, and one might say, well, blah blah blah. That for
I
me
mean, one
was
might say that he's finally back in good graces with the government, finally
that's
getting
what
money.
I
Like
would say.
one might say, like,
And
is
I
that what
think
we're
that's
talking?
what
One
the
might say.
and I think that's what the market is saying the last two days of price action,
Yeah.
because the market's traded like crap the last two trading sessions. Tesla has not, ever since the SpaceX news. I think they liked Trump and Elon being buddies.
Anybody likes a company that has one crew love. Everybody hates a company that has one crew hate. Like it's
so
like don't make it hard.
yeah, I think
Mhm.
this is great. I think this is great price action the last couple of days.
Yeah,
So suck
multiple
it.
time frame breakout too. It's dancing here.
Okay, two stockets there. Two more stocks that we're going to go through. Let's go Nvidia and then Google. Nvidia,
King Queen
stock it or
country of
drop it.
AI, it will never not be stocked.
Yeah, stock
Yeah.
it.
Stock it. What a juggernaut.
They are the market. Tim, did you know that Nvidia is bigger than Germany's economy?
I did not.
Did you know
That's
Nvidia is
crazy.
bigger than Japan's economy?
No.
Let me
I
ask
did not.
everybody. Everybody answer this question. Answer it in YouTube or answer it here. Would you rather take the entire nation of Japan or would you take Nvidia?
Oof.
I
Would you
don't
take
think
the
it's
entire nation?
I take Japan. Matt asked me this question the other day, so he asked me this like we were just
I
talking.
guarantee Nvidia is bigger in 10 years from now.
I'll take Japan. I'll take
Yeah.
Japan.
Until
I'll take
Japan
the
has to rely on Nvidia chips to even run their country.
you
Uh,
know, but it's not like I understand.
listen,
Like
I listen. I know nation states have been all the rave, and everybody loves their little nation states, but we're kind of going into the Taco Bell universe of the future here, brother. So 5 corporations, Nvidia is one of them.
I get it. Listen, it's a compelling
All
discussion.
right.
Actually, I'll still take
Would
Japan.
you take the entire country of Canada or Nvidia?
Well, I think there's a sizable. I'll what's the GDP of Canada? I don't know this the other day. I looked up the Japan and I actually did some research to answer that. I do not know the Canada.
They're slightly under Germany.
Yeah.
I
A lot
just
of
find it
natural
fascinating that
resources.
Mark's literally debating a
I'm
nation,
going to take Canada. I'm going to take Canada.
but it
I
was
won't.
debatable.
Yeah, I wouldn't take Germany probably though, just because well, they don't like nuclear power, and I think that's so backward thinking in what we're about to face in an energy crunch coming
That
up.
is fascinating to me that you chose nuclear power out of everything to criticize Germany in this game.
Yes,
Like
that
I
is what
find
I.
that fact.
Yes, so
I think it was a cover. I think he's really thinking
no, it
about
wasn't. I
something
think their
else.
nuclear power policies are stupid. So
A couple of their policies are ridiculous, but we can debate German policies down the road. All right, so we're all stocking Nvidia. This was an easy one.
yeah,
Um,
I got it. Mark, 1,000,000 points if you can get the reference Matt brought up about all companies in the future are Taco Bell.
it's Demolition Man.
he had to
Nin-
get it. He had to get it.
1993,
Well, of course, it's
Sly
Demolition Man.
Stallone, Wesley Snipes.
Taco
Yeah,
Bell.
are you kidding?
Oh man, what a
By
As
callback.
the
a,
way, a
as a
hidden gem.
connoisseur of Sly Stallone, Wesley Snipes, and Taco Bell, of course I know the reference.
Mhm,
I
mhm.
love all three. I love
Oh
all. How do
man,
you not love
I'm
all
gonna
three?
get
Sly's
me some Taco
fantastic in
Bell
it,
right
by the
after
way.
this.
Wesley Snipes is fantastic.
And
Do
Taco Bell is
yourself a
fantastic.
favor. Pick up Demolition Man. Let's
Yeah.
move on. We got one more Mag 7 here.
Google.
Uh,
Google, last
Google's
one.
easy for
Stock it
me.
or
Stock
drop
it,
it.
stock it, stock it, stock it, stock it, and then stock it a little bit more. Google, like Amazon, is not messing around in the race to AGI. They might not be as chatterbox as Elon about the race, but they are here to play. Really, really loved Google's earnings report. Came in at 33% beat against expectation, 15% year over year revenue, and a best in breed CapEx increase at 15%, increasing CapEx spend for Google off to the races. This is definitely a stock it for me. Mark?
I'm a
Mark, what about you?
pass.
Last one. Stock it or drop
I'm
it.
a cowardly
Yeah.
pass. I don't
We're
understand
not
Google.
allowing this. This is
Then
nonsense.
I'm going to drop it. Then I'll
Thank
drop
you.
it. Then I'll drop it. I just don't understand. And this is my own limitations, most likely. Google's path to dominance in the world, because search is going to die. We're not going to do search 5, 10 years from now, right?
Mhm.
It's all going to be through other mechanisms. Now, does Google win and take a place in that, or is it other things? I don't know. I don't know the last time I used Google.
Mhm.
Does
Do you know what's
YouTube?
more powerful than
Huh?
search? Quantum.
And that's the thing, about not like having this. So for me, I know Microsoft's path, I know Nvidia's path, right? I don't know Google's path, right? And so
Search
like,
isn't dead. I think that's overkill, personally.
and it might be right, but so and if
People
we were
still go to Google and type in Google and get
and
AI.
if we were at 190, I would stock it, but I don't, so if forced to choose, I'll drop it.
I
Mhm.
had criticism, so
Well, a
I'm going
split
to keep
decision on that.
right now.
We're going to keep it there. Well, I'll just break the tie. All right. Last segment here, guys. We're going to be moving into the coach's
Can I
corner.
quickly rank my Mag 7 in totality?
Of course.
Okay. This is what I
Bottom to
got.
top or top to bottom?
Top, we're going bottom, last place to first place. Okay.
Okay.
Meta's coming up at the end. Their earnings was garbage. Apple's at 6, Microsoft at 5, Tesla in that multiple time frame breakout of 4, Amazon in their earnings greatness at 3, Google is at 2. I think they are here to win. I love that earnings report from last week. And you know what? Mark's right on search, but you know what's in the rearview mirror on Google? All of those hypothetical government coming to get you lawsuits. Those aren't happening right now. That's held Google back. Google looks like it wants to lift off here. And then nobody beats the king, queen, and country of AI. That's number one, and that is NVIDIA. They do have their earnings coming up in about 2.5 weeks from now.
Yeah, I ranked mine as well. NVIDIA 1, Tesla 2, Amazon 3,
Excellent.
Microsoft
Love it.
4,
Love the rankings.
Google 5, Meta 6, Apple 7. That was my ranking. So
Love it. All right. Last segment here.
Got it. So Meta not 7. You got Meta higher than Apple. I don't know if I agree with that.
dude,
All right.
I'm
Last
yeah,
segment is the coach's corner where we
I don't
bring
put
on-
consumer staple companies in the Mag 7 at the top of the list. I call me old fashioned. So
Yeah, give you an opportunity to take a shot at Apple there. I like it. All right, Matt, we're going to go into Coach's Corner. We've got 3 topics: market versus the shutdown, year-end seasonality, and zero-DTE options. Where do you want to start with this and kind of, go from there?
Mark picks.
let's go government shutdown. We talked about that a few minutes earlier.
All right, Mark, set this up for everybody. This one's kind of a newer segment for me, so walk us through it.
It's individuals that send in questions, right? And so Coach's Corner is just pro members. Oftentimes, other listeners though, we're happy to field questions from anyone. And so these are just questions from listeners of the podcast.
Excellent. First one on the government shutdown. The government's been shut down for weeks now, but the market hasn't really reacted. Why is Wall Street basically ignoring it? Shouldn't something that big cause more volatility? I think it's a common sense question, probably on the minds of a lot of people. Matt, what is your reaction to that?
The government shutdown impacts people far more than it impacts markets. Money still has a tendency to flow in those areas that have a tendency to that markets care about. The government shutdown is more of a human condition, I would say, than a market condition typically. But the longer this thing goes on, like you're starting to talk about projections of GDP going down for the fourth quarter. You're starting to talk about projections of GDP going down for the first quarter. And every single day, seemingly, that the government shuts down, it does impact the GDP of America by about $1 billion. So it's more of a human interest story and a political story in the first week to 2 weeks. We're obviously well past that. We're literally staring down the barrel at the all-time number on government shutdown that was triggered in Trump's first term. And I would be shocked if we don't hit the record here. Like, I'd be shocked.
Records are being set.
Like shocked. But like the further we go into it, the more I'm starting to think about not just the market having a difficult time carrying a bid because of what the Fed said last week, but is there also some of that government shutdown impacting people and their not ability but desire to carry a bid into a close, desire to deal with some of this on the overnight session? And so I think it probably is playing a role. I know people look at the market right now and they look at the S&P and they look at the NASDAQ and they say, why is the government shutdown not playing a role? Markets are up since the government shut down. You're right. But not your average stock in the market. RSP is not the same conversation. IWM, the small and the mid cap areas of the market, not the same conversation. And so I would say that in the general market, we are seeing some impact here. And I do think one of the reasons RSP, IWM, and some of these extremely cyclical areas of the market is struggling post-Fed is not just the Wall Street throwing a temper tantrum over the fact that they may not, hypothetically, at some point not get a cut. I do think some of that being able to carry something on the overnight is due to the government shutdown. And so I would say there is an impact here, number one, technically. You can't see it when all you do is look at the S&P because you're shielded there. You're looking at the greatest and best stocks. They're not impacted by the government shutdown. The segment we just had talking Nvidia, Google, Amazon, Tesla, Microsoft, Apple, Meta. Mark, do these companies care one iota about the
Not one
government?
bit.
But your average stock in the market definitely does care about that in the marketplace. And so I would say there is number one, it's just being shielded based on the overall performance of some of the tech space and the AI space in general. And then my last thought on it, sometimes we only judge things for what we see for them today. And we don't understand the what could have been scenarios. I oftentimes think about that in the AI world. If we get everything right, we could have a beautiful technological advancement that improves the life expectancy and quality of life for humanity in general, or we could literally be enslaving ourselves. Like that's the radical conclusions on both sides of the spectrum. The what we could have been versus what we will be. And I think about that today with earnings because earnings has been great. It has been great. I know people are starting to like get all, they're trying to blame something for why RSP is going down and why IWM is going down and why the market's not generally going up because earnings by and large has been amazing. I don't want to, try to make an argument that it hasn't. So maybe hypothetically, just shockingly, we are seeing a government impact because we're not getting the upward movements in price during this amazing earnings season from a raw numbers perspective, the same way we historically have. Typically, on the types of beats we generally get more price appreciation out of earnings season than what we have had. So, yeah, technically, sometimes you look at the SPY and you're like, why is the government shutdown not impacting it? And I'm like, it kind of is. Like, it kind of is.
Mhm.
We've had really good earnings in the last 4 days, but we can't carry a bid. Maybe we are seeing some of that. What are your thoughts on that, Mark?
Yeah, listen, I put out notes for my trading lab every day. It's not Saturday or Friday, but every other day. I put out notes. How many days is the government shut down? 35 days. I have barely mentioned those in my notes. I actually led with them in my notes today, and I had more analysis on it today because I think it's impacting the market, and I think it's impacting the liquidity aspects of the market as well.
I think it's impacting a lot more than what any one of us are
And
getting
so
any
I think
credit
we
for
are
right
going to, and one of the hypothetical question I asked in those notes, and I'm like, listen, eventually the government will reopen. Are you going to have a market accident to force that to happen? That was kind of the thought process that I
now. Well,
had, right? So the market, because the market starts tanking and it's attributed to the shutdown, that government's going to open. They'll
yeah,
get hit.
they won't open for those 42 million starving
No,
individuals, but if the market goes down 3%, they'll rush to open.
yep, both parties.
A sad
Bo-
state about our politics, by the way, if that is a true statement, which I do believe is a true statement.
So yeah,
It
so
is a
like
sad
listen,
state.
it's a wild card. It's a wild card right now. Now conversely, if you do get that correction,
Is
government,
it still the bullish catalyst that we thought it would be a week ago, 2 weeks ago, when the government does in fact open up?
yes, I believe it's going to
I
be.
believe too, because I don't, Mark, we have not seen the reactions to the AI news recently that
Yeah.
we have. We
Eh,
haven't seen the
eh,
reactions
eh,
to the trade alleviation from last week that we typically get. You're telling me after the US and China meet and handshake and sing kumbaya, yeah, I can pick apart the trade deal parameters, but you can't tell me that's not a good alleviation event
Yeah,
when there's
I think the government shutdown is front and center. In fact, I think in fact one of the things is I think it's a pretty massive, significant party into the end of the Santa Claus season catalyst,
I
right?
still think it's yeah, I
Now,
do.
do you
I
get
agree.
are you at 6,600 when that catalyst hits, or are you at 7,000 when that catalyst hits? I think it's a catalyst regardless. It's just the path before
Well,
them.
if it's at 7,000, it's probably a sell the news event. If it's at 6,800, it's probably a gobble up and get ready to go, 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 go event. I still see it. I do think the government is playing a bigger role than what anybody is willing to accept right now
Yep.
because we haven't seen the volatility. Just simply because we haven't seen the volatility doesn't mean it's not having an impact. It is on the broad market and it absolutely is on your average stock. I do think that's playing a role. So I still maintain that coming out of the government shutdown is a bullish catalyst, and I think it might be the only catalyst that the market's waiting on.
There you go. Next question is on year-end seasonality, and this one says, "I keep hearing that markets tend to do well towards the end of the year, the Santa rally, and all that. Is that a real pattern traders should pay attention to, or more of a myth? How should we think about seasonality when planning trades?" Open question. Who wants to take
Yeah,
this
I'll
one?
take it first. Yeah,
Yeah.
it's a real thing. You don't have that consistent. Whenever you have consistent data that spans a long period of time, you can put weight on that. And I've never been the biggest seasonality guy, and people that only use it, like if that's the basis for any given trade, I think that's a mistake. But as a factor in analyzing positive or negative seasonal aspects of the year, I think that's absolutely reasonable to do. And when you look at technology, for example, who has fantastic seasonality at the end of the year, right? And I think there's things we could do a whole podcast or seven on why the seasonality works. There's several factors. It's just not coincidence that it happens at the end of the year, but absolutely, right? And so what it does for me is if I get a good pattern and you're in a seasonally stronger period of time, I tend to play those a little more aggressive than as a factor influencing that. That's how I view it.
Matt?
Um, yeah, I think seasonality goes to confidence in the environment. Like September and October have negative connotations on seasonality. September's whole month, the very first of October. But there is a general philosophy of the Santa Claus rally from like mid-October through mid-December, and then the official Santa Claus rally is the last 5 days of the trading season in December and the first two trading sessions of January. But there is an environment where bulls have a tendency to thrive in the Santa Claus rally, loosely described as the Santa Claus rally. And so, yeah, I definitely believe there is an edge there. I don't think you blindly trade seasonality. I think that's a very big mistake. But it goes to your environment. It goes to how confident you are. It goes to how aggressive you want to be. And I certainly do think we have seen the beginnings of that. But it's one of those things that it gives you greater confidence when you have an edge in the market. But if RSPs dance in neutrality and wide range neutrality, I could care less about any seasonality
Yeah,
conversation.
it enhances setups.
Yeah, I agree.
There you go. Last one, zero DTE options. Lately, I've been hearing a lot about those zero DTE options, how active traders are using them. Is that something worth exploring for someone still learning options, or are the risks too high compared to more traditional cash flow or swing setups? I'll take this one.
Yeah, go ahead.
Listen, guys, if you're out there and you're a new trader and you have not gotten a lot of back testing in, practice trading in, virtual trading in, zero DT options, they're the most sensitive. They are the most dangerous. They are very exciting, but you need to have gone through some coaching, some training, and you need to have perfected your systems, your risk management, and your money management. It's true of all things in trading.
Mhm.
But when you start throwing gas on the fire of a volatility type of trade setup with a product that is designed by Wall Street to just decay to the end of the day, I've seen traders, change their life with zero DT options in both positive and negative ways if they were ready for it or if they weren't ready for it. So something to be interested in, excited about for sure, but you need some coaching and you need a system before you ever touch
Can I add
those
to
type
it?
of. Yeah.
The only thing I'll say is this. Most zero DTE option traders don't make money.
Yeah.
The ones who do focus on the sell side of the mechanics during the first part of the trading session so that they can capture that theta decay throughout the day. Most zero DT option day traders that I talk to on a day in, day out basis, their number one complaint is getting bled dry by theta during that time period. Where I feel like there is some excitement on the zero DTE side is in the first 6 hours of the trading session. I kind of feel like that's for theta, like for the pros to sell options to the rookies who are trying to get rich quick. But in the last 30 minutes, Tim, like I can see some scenarios where zero DTE can be extremely enticing on the buy side.
Mm-hmm.
For example, like you can take a slightly out of the money option on an index with 30 minutes to go in the trading session, and it's only worth $5. And if you get a pump, say you're on the call side, and you get a pump going into the close, that $5 option can turn into $50 in a heartbeat. In a heartbeat. Same thing on the downside. So if you have a technical edge as a day trader going into that last hour of the trading session, and you think something's going to pivot, something's going to reverse, something's going to happen, like that's where I feel like you can take some speculative bets, kind of like picking up the big stick, trying to hit a home run type thing with a very, very, very low position size. But I would say the first 6 hours of the trading session is for the sellers. But in that last 30 to 45 minutes, like it's not every day you can see it because you got to kind of combine it with the reversal and your zero DTE. But there's some interesting buy side mechanics using proper position sizing, and only if you are what I would generally describe as a very experienced option trader. I don't think new traders can cut their teeth on zero DTE.
Yeah, I agree with that. All right, Mark, anything you want to throw in there? Finish it
No,
up.
I think you guys just answer that question like pros.
Well, great, because we are pros. All right, guys, that is a podcast. Thanks for the conversation. And if you're out there listening to the podcast, if you've not yet done it, make sure that you like it, you subscribe it on all of our channels. Make sure that you are following. And, one of the best things you can ever do is refer it to a friend. If you know somebody out there who needs financial education, that warm referral, say, hey, guy, listen to these guys, these Justice boys over on the Trading Justice podcast. Get them into the family, get them into the loop, and all that kind of stuff. Matt, we've got Master Trader coming up here on the 13th of November. That's our next big event at Tackle Trading, 10 days out. Learn how to trade like a pro in 2 sessions, November 17th and 18th,
17.
excuse me. Yeah, and you can register for that where, Matt? Where can people find that
Yeah, very
information?
simple. You can hit the link in the description below if you're watching on YouTube or if you're listening on the podcasting app. Come over to YouTube and hit the link in the description. You can find it on our Twitter account. If you're part of Discord, it will be in the announcement channel. There's a lot of ways, but we will also send an email to our pro members because to attend the pro master trader class, you have to have at least a free trial. So what I would suggest is hit that link in the description of wherever you're watching the Trading Justice podcast. Sign up for a free trial, 15-day free trial of Tackle Trading Pro membership. You get to test out the Traders Report, the Tackle Trading newsletter, all those Traders Lounges, the coaches shows, and yes, get access to Master Trader as well. And yours truly is going to be teaching both sessions of Master Trader. Tim, on night one, I teach basic technical analysis, candles, trends, types of charts, types of traders, trends, patterns, and support resistance. And then we turn it up a notch on night two. We get into depth of the retracement, trading patterns, secondary patterns, you name it, Elliott wave theory. Yes, I talk Fibonacci. It's an awesome day too. So if you want to learn how to trade from a technical analysis perspective, there is not a better class than Master Trader. Can't wait to see you there on November 17th and 18th. 6 p.m. Eastern Standard Time. Each class is going to be about 2.5, 3 hours long.
Excellent. No brainer, guys. Whether you're a veteran or a beginner, get over there, join the Master Trader, come and find us and learn from Matt. Great podcast, guys. Love the conversation, love the topics. We will see you guys next time on the Trading Justice podcast.
Later, Tim.